If you're watching this, you're probably tired of losing money trading. And I get it. 9 years ago, I was exactly in your shoes, right? Doubting myself, losing money, and wondering if I could ever actually figure this out. Fast forward to the day, and now I've made over $8 million in verified trading profits. And over those 9 years, this is what I've learned. Traders don't fail because they're lazy. Traders don't fail because they're dumb. They fail because they're focusing on the wrong things. So in this video, I'm going to take you down the roadmap that I wish I had when I first started. 9 years of painful lessons, breakthroughs, mistakes, you name it. We're going to put it all in this one video. So you can skip a lot of the pain for yourself and get yourself to consistency faster. So let's get into it. But first, a little bit of a backstory. So for those who don't know, I started trading in 2016 at 20 years old, and I had opened up a $6,000 E-Trade account as my first trading account. And like most traders, I had thought, trading would be work, but it was going to be easy, right? I was going to kind of make it happen for myself and become a millionaire overnight, right? Which is just not the case. 1 month in, I'm losing $1,200. Month 2 in, I'm losing $900. By month 3, I don't even know how much I lost, but I had a 0% win rate. I couldn't make money to save my life. By the time 2017 started, I had lost now nearly 70% of my account, taking that $6,000 all the way down to about $2,000 and change maybe. So once my account was bled down to very minimal amount of money left, I had to kind of sit myself down and say, hey Kyle, am I gonna keep doing what I've been doing and arguably and almost certainly lose the rest of the money I have? Or am I gonna have to kind of reset and refocus and approach what I've been doing completely differently? And so one of the first things I did was, and we talked about this in another YouTube video, is the law of detachment, right? Me learning to detach from the actual outcome and committing to the process, right? That was the really first step to finding profitability and to stop the bleeding in my overall accounts. And so that's what the first lesson is going to be, the law of detachment. So basically the way I want you to think about this is that trading is like a scoreboard for your psychology or for your mentality in general, right? When you put money on the line in the market is going to expose you for how much you care about that money. You want to be right. Like I've met traders who literally could lose $5, but because they are simply wrong on the trade, they're just wrong. They aren't being, validated being right. They just go all out of whack and off the rails, and they want to be right so badly. Okay, the market's going to sniff that out. That's your personality type. They're also going to find out how disciplined you are, right? If you put on a trade plan and something happens against you and you hit either being wrong or you're losing money you aren't willing to lose, how do you respond to that? How are you willing to let go and get detached from the outcome and commit to what we like to call the process of having everything on all your steps in place before you're actually ever entering that trade? And I get it, this is not easy. Again, back in 2016, 2017, I took numerous trades where I thought I was okay risking $100, $200, and I lost maybe a little bit less or more than that due to commissions or slippage, and I went off the rails, right? I remember my very first trade, I was shaking, my hand was shaking, trying to touch and click the mouse to buy or sell a stock. Okay, I was very attached, too attached, where naturally the only outcome that was gonna come for me was losing money and watching my account bleed. And so as I was bleeding that account, yes, I was learning lessons and learning from my mistakes, but what I was really doing underneath the surface of all things is I was building the detachment to my trade, to my outcome, and learning how to be committed to the process, right? How do I go about actually finding a profitable strategy? How do I go about following my trade plan, no matter whether it's a win or loss? Yeah, the losses are gonna sting. They always sting, right? I'm 9 years in and the losses still sting, but that doesn't mean I deviate away from the trade plan and the trade process that got me here in the first place. Because again, as a reminder, when you are overly attached to the outcome, let's say you're more prone to revenge trading, boredom trading, wanting to make money right now, and so you're forcing trades, FOMO, fear, greed, all of these things that you're not committed to, but you think that's maybe what's going to help you get to the end result of just money. It's very counterintuitive. It's going to backfire. Whereas you're just committed to the process, and that process is what you're refining over and over and over again, and you stick to just that, and you let the outcome be what it is. That's where the sweet sauce is, and that's where profitability can be found. Another analogy or way I think about looking at it is that trading is like a mirror. All the fears and the greeds and the emotions that you may have on everyday, average life that doesn't really affect you of interactions with friends or family or yourself. The moment you have those interactions with yourself in the marketplace, the market exposes you. Even traits that are possibly good things, like if you're confident or you're very smart, a good person, a good friend, those are great traits in real life. You bring any parallels of that to trading, it actually might hurt you more than help you, right? I know many, many people who are very, very smart people, but then they get into trading and it actually ends up doing them actually more good or more harm than good. It's a very unique and kind of counterintuitive game in many, many ways. And so one of the most inevitable and most brutal aspects about trading, you're going to lose money. You're going to make mistakes. You're a human being, right? You're going to have painful losses. You're going to have emotional, slip ups, right? It's going to happen because the market doesn't care about your feelings. It doesn't care about the rent you have to pay next to. It doesn't care about you trying to put food on your families or yourselves, dinner table, right? It doesn't care about that. What it cares about is what your process is and what your edge is. That's that. Most people are looking for shortcuts, not skill sets. And if you're not obsessed with kind of building that skill set to build and develop that process, you've probably failed before you even started. Because when you're going through your learning curve as a beginning trader, the really and most important question that matters is, can you survive long enough to go through that learning curve and ultimately reach profitability? Because the beauty and the curse about trading is that everything we just talked about, all those characteristics we mentioned, trading is going to make you rethink them. Trading is going to make you work through those emotions and learn more about yourself than you probably have anywhere else in life. I can say that personally for me, without a doubt. And no amount of therapy, no amount of friends, no amount of heart-to-heart talks with family members, like trading has dissected me more than anything else. And the only way I was going to get profitable was be able to work through that with, myself. Another like example or analogy here is think about like a stove in a kitchen with a fire, right? We all know logically, yeah, you touch the fire, you get burned, and it's not going to feel good. But what do? We still cook with pots and pans. We still make dinner. We still make lunch. And so one little mistake, one little, mishap of misplacing your hand, and all of a sudden you get burned. Trading is very, very similar, where we have to use the tools and the markets as our disposable to kind of make the income and make it our job. But again, one self-sabotage, one kind of mental relapse, all of a sudden you're getting burned all over again. Okay. And so you have to kind of come back in and deal with that ebb and flow of being disciplined, staying on the path, and again, not getting burned in this example. But if I can dwindle down everything I've just said into one simple sentence to make it as clear as day, it is stop trading the money, start trading the process. Simple as that. Now let's jump into how I actually, backed up this potential mindset with actual math and edge. So lesson number 2 here is how I started getting into tracking and journaling, okay? Because once I stopped obsessing over trades and started kind of focusing on the process, well, the first thing that led me down to was like, well, what is objective? Right? How can I objectively know whether something was good or bad? Because my feelings can lie to me, right? I can feel good about a trade even though it wasn't a good trade. I can feel bad about a trade even though it was actually a really good thing to do and a good trade to take. But the numbers and the math behind of what I was actually doing when it came to tracking my trades, those do not lie, okay? And that's what I started diving into. And so those two main things, right? I started tracking everything and I started standardizing my risks to ebb and flow with that tracking. So I started tracking kind of like a crazy man. This right here that you see on the screen is actually an example of the spreadsheet and the trading journal that I use to this day. It's much more elaborate than this because I have, I only have like 24 trades as examples here. But again, I have 4,000 plus trades all recorded, but they all look like this, right? I started trading. What exchange was the ticker on? What was the ticker, obviously? What was the sector? What was the broker? What was the position size? What was the share amount I took? What was my average in, my average out, the date, the time frame? Again, ultimately, what P&L I had? What was the percentage gain? The cents per share gain? What was the actual setup in front of me? And not only that, I then actually took screenshots of those trades and then put them along, the actual trade so that I can go back literally now 9 years later and find some of the most earliest trades that I've ever taken in my career. And I wouldn't be able to do that had I not started tracking early on and as often as possible, literally every time. In fact, even to this day, if I don't get a certain recording down or a certain screenshot of a trade, like it almost feels like I'm sick. It becomes such a huge ingrained habit that it's almost borderline an obsession. It kind of sometimes has to be that if you want to be able to get to the levels that I've gotten to. And again, it doesn't just stop here, right? I have, again, there's going to be blank here, but monthly Excel calendars, right? Where it's like if you watch my own personal YouTube channel, you see me filling out all of these months, right? All of these months of every year, I am like recording from the trades into the monthly tab. I then have graphs that are, these are not populated because it's just an example, but all this data point, my average gain, my average loss, how many trades I took, wins, losers, average weekly gains, right? Average certain setup gains, right? But you can go even further down here where I have, not only monthly reviews, yearly reviews, first red days, pump and dumps, China pumps, overextended gap and gaps. Like I will detail just not by trade, but even by setup, right? So I know, hey, this setup in this market's not working. This setup over there is working really good. Let's make a shift. Right, let's get profitable on this setup over here versus not this one because it's not working right now. And again, I wouldn't know that if I had numbers because again, the numbers don't lie. My feelings, I could feel like breakouts work really well in this market, but I wouldn't know unless I track it. And I've done that before. I remember one time thinking I was actually doing good on a setup until I started tracking per setup like I do here. And I found out I was break even. It wasn't a setup even worth trying because I didn't know, but the numbers don't lie. My feelings certainly did in that example. Because again, something to think about, if you don't actually work on your trading and track your trading, you're not working on your trading. You're just working to work, right? You're not actually getting feedback. Imagine running a marathon, preparing for a race and never knowing your time. Like how did you do better? Did you do worse? What was mile 13? How fast were you running on mile 10? Was that faster or slower than last? Like you would never know. So you have to track. I think it is non-negotiable. Now, we've talked about tracking obviously just now, but then I also said standardizing my risk to able to track more efficiently. What do I mean by that? Well, the rule I always suggest and always say is the 1% rule or the 1% concept, right? And how I kind of come into this, and it's not like I discovered this, but how I ended up accepting this as an approach to take, because when you're too scared, you might might take too small of size. When you're too excited or too greedy or too happy or, just looking forward to a play, you might take too big of size. Both sides of the spectrum don't end up actually leading to a level of consistency that you can feel good about on paper when looking at your stats, right? So following the 1% rule allows that to be very process driven and sticking to, the same process every single time. So 1% rule is a 1% of your account value. If I have a $10,000 account, 1% of $10,000 is $100. Meaning if I'm going to take a breakout, if I am going to short a first red day, if I'm going to take any setup under the sun in my trading strategy system, whatever, if I lose on the trade, I'm going to only lose $100. That doesn't mean I only put $100 in the trade. There's a big misconception there where people think like, oh, you're only going to put $100 into the breakout. Like, how are you ever going to make money doing that? Yeah, that would be very difficult. But if I have a $10,000 account, I could put in $2,000, $3,000, $4,000 to a trade. I just have to know on myself that if I'm going to stop out of that trade, it's going to only lose me $100, which again is very, very normal. Many times I'm putting in at least 10, 20% of my accounts and only losing, this 1% concept to where, this helps you survive. Right, back to getting through the learning curve, and do you have enough? Can you survive the learning curve? If you're risking 1% of your account, theoretically you have to lose 100 times. And not only that, if you lose 50 times and your account goes from 10K to 5K, you should probably readjust. And your 1% is no longer $100; it's $50 because you have a 5K account now. It rewards you when you're doing good, but it then helps you defend yourself when you're doing bad. And there's no feelings there. It's like I don't care if I'm scared, I don't care if I'm excited. It's 1%. Can stay disciplined, know what I'm sticking to. I don't have to constantly be changing and rethinking if I made the right or wrong decision in terms of risk. It's for beginner traders. It's like, boom, this is what I'm risking, 1%. And again, some people are just like, oh, I'm gonna do 5%. I wouldn't go over 2. If you go over 2%, it's gonna be very aggressive. I know it doesn't sound like much, but trust me. Again, back to the example, if you risk 1%, you need to lose theoretically 100 times, if not more. And that's if you're not lowering it. If you risk like something like crazy, like 5%, you've got 20 trades. I've lost like almost 15 trades in a row. If I did that risking 5% per trade, my account would be gone practically almost immediately. You might think you're super aggressive and you can risk a lot and you don't feel much. It doesn't matter, right? Pick something safe and long that has longevity to it, where it's just in the 0.5%, again, maybe 2% max. But 1% for me or lower is always really a comfortable spot to be in. Now, some of you might be asking, well, Kyle, that's great that I've now implemented this 1% rule, but like why, right? Where if we're tying this into systematizing your risk and then knowing how to track, well, where does that, these numbers don't lie. You keep saying the same thing over again. Like, where are we getting to with this? Well, once you get all those things in place, now you can actually kind of mathematically have an equation for whether your strategy, whether your trading is profitable or not. And a lot of traders like to call this expectancy, right? What is your system, what does your trading style or process expect you to make, where you could almost extrapolate that out over a longer period of time, right? And so there's an equation for expectancy. The equation is your percent right. So how many times are you winning? Okay, it can't be 100%, you're not gonna be perfect, and it's probably not gonna be 0%. But somewhere in your process, throughout your journey, you're gonna have a win rate. Okay, mine over my career is around 60%. In this example, in this data set here, this was for the year of 2023, I had a win rate of roughly 59%, so just under that 60% mark. So it's gonna be your win rate times, how much do your average win? Okay, that's why you see this formula here. I have my win rate times my average win in R, which is 1.75. So in this case, in this data set, I only won 70% more than I lost. So the risk reward wasn't great, but it was still positive, right? And then I'm going to subtract my losing rate. So if I won 59% of the time, well, then my losing rate would be what? 41% of the time? So you take 41%, then times your average loss, which in this case is 1, right? The 1% or the 1R in this example. So totally, I'll put a formula on the screen right here, but it's like win rate times average win minus lose rate times average loss. And that's gonna get you your overall expectancy. So here, it tells you my expectancy is 0.62. Now, if you times that though by the average risk per trade I'm taking, that gets me to an average expectancy of $3,000 per trade, okay? Now again, the math's gonna be very unique to me and only me, but again, that formula should work for you in your own trading. And you're gonna be able to find out, hey, if my expected dollar amount per trade I take is negative, then again, you're expected to lose money. But if over, again, 100, 1,000, however many trades you have under your belt, and your expectancy is a positive number, then that means it's expected that per trade, you're going to average that amount of dollars. Now, again, it's not that perfect. You're going to have losers, you're going to have winners, but over the long run, that is what the average kind of profit per trade or loss per trade is. It's your expected value. So in total, again, that's the whole measurable process of this second lesson. It's like tracking your stats into actual numbers that don't lie so that you can better understand your own system and actually almost predict it with a level of expectancy. So diving into lesson 3 here, again, we just talked about expectancy, but unfortunately, expectancy doesn't mean anything if you aren't able to stick to that process and avoid random kind of execution. Because again, similar or going back to 9 years ago when I first started, trades I wasn't sure about, I would go too small in. Trades I was too greedy or excited about, I'd go too big in. Random trading is going to lead to random results. And yes, that's why we have this 1% rule in place. But beyond that, again, we can, talk about the numbers all we want, but when you go through this process, when you go through taking losing trades, we're human beings. We're going to want to deviate from the system. You take 5 losses in a row and you want to think and rechange everything. But the people I tell in Clover all the time is that just because you took a bad trade doesn't mean it was a bad trade. Just because you took a losing trade doesn't mean it was bad. And just because you took a winning trade doesn't mean it was good. I've seen many traders all the time profit off something that was a terrible trading practice. And I practically tell them, I say, hey, you do this enough, you won't be here. So it's very counterintuitive. Don't just take the end value of win good, lose bad, right? Look at the trade itself and how good and structured the trade and the process actually is. Also, by the way, guys, we are opening up spots for our mentorship where we are teaching people live and trading live almost every single day in the chat room, leaving live commentary, trailers, you name it, etc. The link for that is in the description below. I will show you how to apply for that at the end of the video, but now let's get back to lesson 3. So the best thing I leave you with for this lesson 3 here is, yes, our job as traders is to make money, but it's with the big caveat of making money in the most safest / best risk-adjusted way possible. Back to the example, I can make money doing the most reckless and most degenerative things possible. But over the long run, that isn't safe, predictable, and repeatable. Whereas if I have a process that I can stick to, I have a process that I can control, and I'm doing it safely, that is going to be the counterintuitive feeling that feels kind of boring at times, but it's what the pros do to lead to profitable outcomes more times than not, over and over again for the next 5, 10, 15, 20 years, not just YOLOing on some options tomorrow so I can double my account. Okay, that is not the process to longevity. So lesson number 4 is going to be building a playbook and kind of stacking repetitions of that playbook. So when I first started trading, I was pretty much open to trading everything, right? I was like longing stocks, I was shorting stocks, I was buying breakouts, I was shorting bounces, just the whole room was open for me to just give it a try. And it wasn't until I really tried to dissect and looked into all the traders I was looking up to, or all the profitable traders that I had knew existed, they weren't good at everything. In fact, they were bad at most things. They were only good at very specific niches or trades or ideas that happened more times than not. So my mind shift didn't go from what other stocks can I buy or short just to try to gather enough money and start to keep throwing more darts at the dartboard, and I switched it to what are the things that are bad that are losing me money, and how do I get rid of that and just keep what is halfway decent left? Like, where am I actually doing good, and throw everything else out of the way. And so this is what we teach at Clover all the time, which is pick one good setup. You don't need to be profitable on 10 different setups. Traders who find consistency, who find real true consistency with everything we've been talking about so far, usually find it on one setup. And they usually have that one setup create hundreds of thousands, if not $1 million+ on just a single setup. I have single setups that have made me over $1 million alone. And so it's not about, how much can you make just on this one setup that's gonna get you started. Of course, when you're 10 years in or 9 years in like I am, yeah, you can develop and add new things. But when you're on your first and last lifeline, your first $6,000 account like I was, you don't have the bandwidth or the leeway to try everything. You're on life support, whether you think you know it or not. You have to use what you have at your disposal as most efficiently and as best as possible. So finding one setup and sticking to that is going to be vital for your survival. Now, the tough part with this is that yes, there is going to be some tinkering with. It's not like you can just come into the market and immediately know what setup that is for you. You do kind of have to test and tinker and say, I'm going to try breakouts. Wait, no, breakouts aren't for me. Let me try this a little bit. It's more of a methodical discipline thing than just dartboarding it, right? If I'm just throwing darts at a dartboard constantly all over the place like I did, that's not how you want to do it. You want to be like, okay, let's give this setup a try. Maybe it's not for me or it's not my personality. Okay, let's get this setup a try. So you can start to really gather and kind of work out the kinks and the inefficiencies and the mistakes you might make with a particular setup. And after doing it for a few months, you might be able to find out, hey, most of my winners come from this one setup. And then you dial in on that one and you throw away everything else. And on that one setup that you find, for me, it was actually panic dip buys. Again, fortunately, panic dip buys don't really exist too much anymore, in my opinion, at least on the OTC market, which was my favorite at the time. But once I found out that this was the setup for me, I threw everything away for at least a few months. I didn't even look at other tickers. It was like, I am only worrying and focusing on this panic dip buy. and I'm only wanting to learn the nuances and the idiosyncrasies and the characteristics about this setup, which you will do over time. That's only going to come naturally with the more repetitions and experience you get from trading that one setup of yours. And when it comes to doing these things, there's multiple ways to go about it. For me, it's like once I found that one setup, then I started just gaining experience every time I took that trade going forward. Some traders who are much more advanced than I am like to backtest. They might just say, hey, this is what the setup looks like, this is the criteria it has, or I'm gonna go get a software that then backtests it for the last 10 years and tells me what the edge is. Some traders just want to paper trade. I know many beginning traders don't feel comfortable maybe risking money on new things. That's fine. They'll just throw fake money at it and see how did this perform, and they'll track the stats of their fake trading. Now, the caveat with this is that using paper trading is very easy to detach. Back to the law of detachment, it's very easy to detach and not care because there's no outcome, there's no consequence, right? I can just throw paper money at this stock, and win or lose, it doesn't, no skin off my back. So nothing wrong with starting paper trading, but understand if you want to really feel the emotions, if you want to really get good at detaching, you're going to have some skin in the game and some money on the line. But either way, whether it's any of those things, you could still forward test like I did, you can still back test like you did, or other traders did. You can use that to your advantage to start developing and building that experience and hopefully that similar edge that's going to get you profitable. And the last thing I'll mention is beyond learning the experience of a setup, you should also be learning and building your process, right? Like we've talked about. So if I am, learning edges as I'm going on a setup, but as I'm trading that edge or trading that setup, it's like, did I break any rules? Did I size incorrectly, right? Did I get emotional, break my trade plan? Did I not follow my watch list correctly, right? And you start to kind of combine both these things of your own trading and then developing the actual edge that probably exists or doesn't exist, whether you're trading it or not. Like if breakouts work, they're going to work with you or without you. But they might work without you if you're making all these mistakes. But if you're doing the correct things and then applying those correct things to an edge that works, then you find really good harmony, and that is how a profitable skill set is developed and ultimately money coming into your account. Now, lesson number 5 is not going to be people's favorites. In fact, it's probably going to be one of your least favorites, and it comes to learning how to keep your money or actually managing some level of risk beyond just taking one loss, right? Everyone can stop out of one loss, but how do we kind of keep the profits that we've made is what's difficult. Something I always say is like profitable trading is hard, but keeping the money that you've made from profitable trading is harder. And this is where like stop limits on your account come into play, right? How many times are you willing to take a setup before you throw in the towel and say, hey, I can't trade this anymore? Again, max stops, broker stops. If you lose too much, how are you wiring out of your money? Right? How are you taking money out and actually paying yourself to avoid kind of risk of ruin, right? For me, I know when it comes to giving setups so many certain amount of tries, I used to give, I had no limit. I was like willing to try to set up 6, 7, 8, 9, 10 times. And all of a sudden I'd look at my trade on the day and I'm down, 10 times more than I should be because I took, again, 10 times other opportunity or tries on this ticker that were never going to lead to me money in the first place. That was my emotions just kind of revenge trading and wanting to make money back. And so now I have a rule that says, 3 to 5 attempts at the most. If I take one set, I take a breakout, I lose. But then it sets up again. I take the breakout again, I lose. Now it's like, this is the third try, okay? If it doesn't work, I have to be okay kind of giving up. Again, in some cases, there are setups that I think are deemed to be good enough where I say, hey, I'll give a 4th or 5th try, but 5th is like the absolute no more, no less. Because if I've lost 5 times now, the chances of me making my money back on the 6th attempt are very slim to none. If anything, it's going to only lead to more losers. And so at some point, you have to know when to throw in the towel. You have to know when to kind of wave the white flag and surrender. And I know it sounds counterintuitive, like why would I surrender? I'm here to make money. But I promise you, sometimes the best thing is knowing when to just stop losing. Like there's gonna be periods where you can't win to save your life, but just not losing anymore is like the best thing you could do. Right? There's going to be environments where you kind of come across that scenario, and recognizing that and stopping the bleeding is so much more valuable than you realize. Another example is in traders that I see, they'll have a good profitable 2 weeks, and then they have one bad trade and they give all of their week's worth of profits and more. Building some kind of plan of saying, hey, you know what, if I ever lose more than a week's worth of profits in a single day, or I give back, a month's worth of profits in a week, think about taking not a break, but having hard stops on your trading where it's like, okay, I need to reevaluate, maybe I need to wire some money out, maybe I need to size down. It's like have these procedures and these precautions that know when you ever get into a rough patch beyond just taking one loser, there's extra added layers of your risk management system that help protect you in, again, worst case or very rough case scenarios. Lesson number 6 is contrary to popular belief is that you can go broke locking profits in too early. the famous or the most popular saying is you can never go broke taking profits. And I get where they're coming from, because I do agree with that in some level, but there's massive caveats to this. It's like trying to have a one size fits all quote to every trader that ever exists, okay? Because, and frankly, if I took profits too early on some of my biggest winners, I'd be leaving hundreds of thousands of dollars on the table. So much money, even doing so, even locking in gains as I should, as my process and my system says, I've still left money on the table. So doing it even earlier than I've already been doing it, we're talking, again, way too much money that I don't even want to add up and get frustrated in the middle of this video. Like, so much money has been left on the table with me, okay? But the reason why I say that is because it's such a common thing for newer traders to want to see the first sign of profit and lock it in immediately. Again, trading your emotions or trading the money versus trading your process, right? They immediately see something that, is slightly up. Maybe they're having a rough week and they're finally making a profitable trade. And again, that quote comes to their mind of like, I'm never going to go broke locking in profits. So what do? They sell the trade and they feel good about themselves. And then 15 minutes later, the trade triples and they would have made so much more money had they just stuck to the trade plan they made, or they stuck to what the edge tells them to do, okay? I say this all the time of traders who maybe sell their longs or sell their breakouts too early. I ask them, well, what did you expect for it to happen? Like if you bought a breakout, what was your expectation? Was it to just pop up 1% and then you just take your profits? Or did you put in your trade plan saying, hey, I'm gonna buy this breakout, I think it can go 10, 20% or more, and I will not sell until it gets there, right? Or I know back to the back testing, right, with the previous lessons, is like, hey, over the last 200 breakouts, the average breakout goes 33.5%. Again, I don't know those are actual numbers. I'm just using this as an example. But if you had those stats, if you had those numbers, then what should you be doing on the very next breakout you're buying? You are waiting for 33.5% of the breakout to work, right? Like you let the stats, you let the numbers tell you what to do. I'm going to harp it one more time. Like this is why tracking is so important, right? You'll have the average expected value for a breakout, and then you'll be able to do it on your own stats. You'll be able to know what your average win is, what your average loser is, maybe the average holding time. Like, hey, the average breakout goes this 33.5% that I'm making up, right? But it does it over 2.5 hours, or like, by hour 3 of the breakout, this is where it's the peak optimal time to sell. Like get nerdy with it, right? Don't just blindly trust a breakout. Like try to know some stats behind the trades. Now, before we go on to the next lesson, the one caveat to this is the opposite side of this, which is don't become overly greedy, right? It's one thing to make the mistake of always selling your losses or selling your gains too soon. Don't be on the flip side as well and saying, I'm just gonna let these winners run as long as they possibly can. Like I'm going to sell the top. I'm going to lock in the maximum amount of profit as possible, no ifs, ands, or buts, right? Because the reality is, even with all the stats that we just talked about, even with doing what you could do correctly to know the expected value of a breakout, let's call it in this example, you're not gonna sell the top, guys, right? In fact, you're gonna largely always leave money on the table. Like getting back to doing me not wanting to find out how much I've left on the table because it'll frustrate me. But again, you wanna be somewhere in the middle. You're not gonna be perfect, but you don't want to be, locking in $100 and thinking you're rich, right? You got to find somewhere in the middle where you're probably going to leave money on the table, but you're taking the average expected value and you're going to do that 100, 1,000, 10,000 times. And again, over the 5, 10, 20, 30 years, those, middle ground levels of profits, those middle ground trades will lead, to millions of dollars in life-changing money. Lesson number 7 is let's reverse engineer our goals, okay? When it comes to telling newer traders to set goals when it comes to their trading, okay? The first thing that comes to most traders' heads, and it's my least favorite thing, is when traders set a daily profit target. So they'll say, I want to make $100 a day. I want to make $200 a day. And that drives me freaking nuts because that isn't how trading works. If you went to your 9 to 5 and you said, I want to make $500 a day, well, you can simply do what is 40-hour work weeks divided by 500, or divided by what, 5 times 5 is $2,500. You could get to how much you're paying per hour, right? Because that's how an average job works. With trading, throw that all out. Okay, the market doesn't care if you spent 40 hours working on your trading. The market doesn't care if you spent 80 hours working on your trading. I've had weeks where I've put so much time and effort and I've left with less money. So it's not about, how much can I make perfectly on the day every single day. There's gonna be days I have no setups, and there's gonna be days I have 10 setups. There's gonna be slow periods and fast periods. There's gonna be crappy periods and good periods. I might make no money in one single month and then make someone's annual salary in a single week, right? It's not easy and simple to just say, hey, I'm gonna make $200 a day. But what you can do is going back to what we did with the expectancy is saying, hey, I know my average expected value per trade is $3,000. Then I should know over the next 60, 70, 90, 100 trades should lead to this X amount of money. perfect example is that if I know over the next 10 trades should be a $30,000 profit for me because every single trade I take, it's expected I make $3,000. Now, do not think it is expected as in, oh, if I don't make $3,000, I'm a loser. No. The expectation or the expectancy of the numbers and the math we've been doing lead to that. So yeah, there might be a 10 trade period where, yeah, I'm not making $30,000, but over 300 trades, as that extrapolates out, as the process and more trades and the number of kind of a sample that you have, a bigger sample, if your expectancy keeps playing out the way it should, like your data kind of has told you to, right? If you have the kind of data that I have on my own trading or on your own trading, this is what you can kind of expect out of it. Like, perfect example, think about maybe percent gain. I know for me over the last 9 years, I averaged 10% on my money per month. So if I had a $1 million account, I should roughly expect, hey, next month you're probably going to make $100,000. It doesn't mean you're going to. I might only have a $50,000 a month or a $30,000 a month. I might have a losing month, but over 12 months, over 5 years, over 9 years, I can confidently say the next 9 years are probably going to average me 10% a month because that's what it's done the first 9. Now, previous performance is not indicative of future returns, like we've all heard that. But again, unfortunately, the past data is all we have to go off of, right? The past performance and the process we've had that's gotten us here is largely what we have to go off of. And I'd rather go off of that than just how I'm feeling, right? Just emotionally feeling good. And I'd rather be very systematized and kind of process-based like we've been talking about than just winging it and guessing. So the mindset I want you to take away from this last lesson here is don't go from I need to make $200 today or I need to make $200 a day. Think about how am I going to execute these next 100 trades correctly to gain and continue to build that expected value that you currently have or that you currently want to have. So it's not about just making the money. Again, it's following the process that got you there to making the money in the first place. So these are the 7 lessons I had to learn to take me from, again, losing practically a year straight and down 70% of my first account into over $8 million in trading profits now 9 years later. So if you're watching this and you're thinking, yeah, Kyle, that's great. I've just learned more information. I've always had more information, but I need someone to help me actually execute this and put this into plan. Then here's what I suggest you do. Apply for Clover Trading. So you can click the link below or scan the QR code on your screen. Tell me a bit about your situation, what you're going through, your account size, your experience, etc. And my team will reach out to you to see if we can work together. And if you want to see this simple trading strategy that has made me money over the last few years in the market, click this video right here. Anyways, like and subscribe. Thanks so much, and I'll see you guys next time.